Welcome to today's webinar. We're just waiting for everybody to trickle in. Amazing. I think we're pretty much there with participants. There's still people coming in. Numbers are quite high. That's great to see. Welcome to today's webinar. We're going to be covering the EU CBAM and trader responsibilities and policy developments. We're going to cover practical guidance, policy insights, and at the end, we'll also do a Q&A session. Few housekeeping things. This webinar is being recorded, but none of the participants are visible. It's just the panelists that are on a screen that is being recorded. After the webinar, we'll ask you to fill out a feedback survey from Zoom, where you can let us know if you'd like to receive the link to the recording and a copy of the slides to be sent over to you. Super. Let's go ahead. Who we are at Chamber Customs. We offer declarations delivered by a network of chambers across the UK. We also do bespoke trainings and consultancy solutions, from applications to special procedures, feasibility studies, classification, trade agreements, customs warehousing to CBAM data and reporting and consultancy. We're fully owned by the BCC. The BCC is the largest business group in the UK and is representing thousands and thousands of businesses nationally. And a little bit about the speakers. Emmanuel, can you tell us a little bit about yourself?
Hi, good afternoon, everybody, and welcome to this webinar. My name is Emmanuel. I head training and consultancy at ChamberCustoms. So I talk to traders mainly in the UK, but internationally very often. And what we specialize in is moving goods in and out of the UK.
Thank you. And now, William, welcome.
Hi, good afternoon, Marika. Good afternoon, everyone. William Bain, Head of Trade Policy at the British Chambers of Commerce.
Lovely. And my name is Marika Majewska. I'm the Customs Development Executive here at Chamber Customs, and I lead on development of bespoke training solutions from design to delivery. And today I'll be chairing the webinar. Take it away, Emmanuel.
Wonderful. Thank you very much, Marika. What we're going to be covering today is the CBAM, and I'm sure that's what you're all here for. So I think what's a couple of kind of basic notes. I'm sure that you will have heard what CBAM is, but if you haven't, CBAM is a mechanism to look at carbon border adjustment. So it's a scheme that the EU started introducing, followed by various other countries around the world. Now, the scheme applies to carbon-intensive goods, so goods that require a high amount of carbon for their manufacturing process or for their processing. So what the scheme aims to do is to actually put a price on the carbon emitted during production. What it does is it encourages cleaner industrial production in non-EU countries. Why non-EU countries? Because this scheme applies a price to that carbon emitted during the production, and it does it at the border. So when the goods cross the border into the EU, there is a tax payable on the amount of carbon that was emitted during their production. Now, I think what's important to do is to make sure that we are we understand that there is a difference between the UK and the EU schemes. So the UK is following the EU in a CBAM scheme, and we'll talk more about it later. So today we're going to concentrate mainly on the EU CBAM scheme and what it means for exporters of goods from the UK or from other countries, and what happens to these goods when they cross the border and they are imported into the EU. Now, the EU CBAM applies to some specific goods. This is subject to change, but and William will tell us more about what's coming. I'll cover what is. So currently, what's within scope of the EU CBAM scheme are products of iron and steel, and our wonderful animation will move on to the other ones. Wonderful. We have aluminium, fertilizers, hydrogen, and cement. So these are the 5 categories which are in scope at the moment. Within those categories, we have specific commodity codes that are to be, that fall within scope. So what we're going to do is tell you a bit more. But note number 1, if you're on this call, what you should be aware of is that the commodity code of those products that you export is absolutely key to understand if your product will be subject to CBAM when it crosses the UK border. So classification has never been as important. That's great, Marika, thank you. So the scheme started back in 2023 in Europe, and it was given a window of a phased approach. So between 2023 and 2026, we have a transitional period, and various things have happened. Initially, we had a first reporting period in 2023 to 2024, where data was being collected by European importers, and people were getting used to how the scheme was working. Now, during the first reporting period, we could basically use estimation as our main mechanism. The first part of the scheme was really to get used on how to do the exercise, how to collect data. What then happened is in July last year, so it's exactly a year ago, in July 2024, we stopped, Europe stopped accepting default values. And actually, we were only allowed to use 20% of default value, so 20% estimation. Europe insisted in some detailed information. They didn't want just estimate, they wanted actuals. We'll talk more about this because this created quite some stir and quite some problems. The idea is that the transitional period will end at the end of this year, and in 2026 we will move into the definitive regime, and payments will be demanded based on the carbon contents. Now, what was going to happen is that what we need to understand about this is that the reason why Europe had a 3-year period to implement this scheme is because they are collecting feedback from European importers, but from the larger community, to understand how this is impacting trade and whether this is actually being too much of a barrier. Because it's got an interesting idea of reducing emissions, promoting greener production, but what Europe has to balance it with is, with the ability of trade to continue trading. So there are reviews underway, and William will cover and explain what the European Union has found given the feedback, and how they are tweaking the scheme to make it a bit less daunting to business. Before we go there, let me tell you a little bit more. So the one thing that is quite important for us to realize is that if you are an exporter of products that fall within the scope of CBAM, you are a third country exporter in the eyes of the EU CBAM, and what you have is a commercial responsibility to your client in the EU to provide the right figures that they will need to file their CBAM return. So as a third country exporter, you have to provide information on what commodity you're exporting, what routes of production those goods are taking, and what emissions are embedded in the products. That is the, if you like, the total of what emissions were embedded in the product when it was manufactured in its origin country, plus all the emissions that were, if you like, expended and embedded in the product through the subsequent stages of manufacturing. And if you are the last party exporting, it will be your responsibility to collect and provide that information. So we have a commercial responsibility. On the other side of the fence, the EU importer will have a more legal responsibility, because they are the party as the importer of record that will have to file a CBAM return with the European Union using the approved reporting template, submitting via approved software in an XML format the information that the EU requires, and they do that on a quarterly basis. Watch this, because this is something that is being discussed. So for me, this is really an important part for everybody to understand. Now, so what information do we need as UK exporters to provide? Now, there's a lot of confusion about this. Europe has, the European Union has created a very comprehensive spreadsheet with very comprehensive instructions on how third country installations can calculate their CBAM emissions. It means that if you want to, you could actually do this yourself. It is not straightforward. It is quite a complex and involved set of calculations, but it's feasible. That spreadsheet, that template involves more than 10 different tabs where you provide all the information, and there are some built-in formula to get to those numbers. What you have to share with your European importer is the communication template, if you like, the last tab, and that includes simply the resulting numbers, the resulting emissions, direct, indirect emission, electricity embedded, and route of production, percentage of estimation. But that is not going to be sufficient, because like any or many other ETS in place and in play at the moment, these numbers will need verification. So what we recommend is that if you're approaching this, you create a reporting methodology. That is what the EU asks as well, so that you document the steps that you take and how you get to that calculation. So you need to document whether you are a main producer of bare metal, or if you are a processor, like an intermediate industry, you need to explain what goods are in the scope of the EU CBAM. You also need to explain the boundaries of your production facility and what you do within your facility, you know, the processes that actually take place within your facility, as opposed to the products that you buy, so the precursors to your processes, and how you calculate those emissions. You have to explain what reporting period you're using as a sample. Are you calculating your numbers based on quarterly information or on a yearly information? And what kind of time lag do you have between production and sale? In that reporting methodology, you also have to explain things like your approach to data collection and emission apportioning, because in your facility, you may have more than just goods destined for Europe. So all of this information will lead to a calculation, and that calculation today can just be shared with your importers in Europe. However, from probably, well, the European Union is late. We should have had confirmation in the second quarter of 2025, but we haven't had it. But this information will need external verification. So your numbers will need to be verified. We are working on creating a verification service that is accessible, and we will share more information as it becomes available. Now, this is what we know so far, and what I would like to do is to now kind of switch from what we know and what is in force at the moment and start looking at what's coming. So this is where I would like to give the word to my colleague William so that we can actually talk about the link with the EU CBAM scheme and all these things that we've heard about the alignment from the EU and what it will mean, because I don't know about you, but we've had lots of questions and lots of confusion as to where all this is still relevant given the changes that have been discussed at policy level. So William, can you give us some more information?
Thank you, Manuel. Great to be here today. Very important to sort of explore what was agreed at the UK-EU Leaders Summit on the 19th of May, how that will impact on things going forward, what might change, but what is staying the same, and also the legislation which is going through the EU institutions right now that's had an impact on the compliance measures, the so-called Omnibus 1 regulation, which is going through the EU and is expected to become law in early September. So let's first of all look at what was agreed at the Leaders Summit on the 19th of May. So both sides agreed in principle to negotiate a linkage of the emissions trading schemes of the United Kingdom and the European Union. And so those negotiations are expected to formally get underway in the coming months. Officials have obviously been speaking with each other already, but the formal beginning of those with mandates in place from both sides expected really to get underway in the autumn. And those negotiations could well take some time because there will be, in respect of many areas, what's been agreed, dynamic alignment. So that means that the UK will be following the rules and regulations set by the EU in terms of the legal rules underpinning the emissions trading scheme and required to have linkage. And if and when an agreement is reached and it gets implemented, that would mean, as in the case of a similar agreement the EU has made with Switzerland, the CBAM obligations between the UK and the EU would fall away because our emissions trading schemes would be formally linked, the markets would be operating in the same way, and so the requirement to make the attestations and potentially from January the purchase of CBAM certificates would no longer apply. But the important thing is we're still some way away from being in that position. We're not even officially starting negotiations until the autumn. An agreement would have to be reached. That legal text would then have to be ratified by both sides. It then has to be implemented. So we are some period away from being able to say definitively that CBAM obligations no longer apply to the UK in respect of the EU scheme. And for that reason, it's really important that the guidance that you're receiving today and you've received in the last few weeks is followed because until or unless that agreement is reached, everything remains as it is, including the additional obligations that come in on the 1st of January. Now, one of the decisions that has still not been taken and creates additional complexity in terms of traders in Northern Ireland is, of course, whether Northern Ireland will become part of the EU CBAM or whether it will become part of the UK's CBAM. And in recent months, the UK government released draft clauses of the primary legislation necessary to introduce its own CBAM here in the UK. And the situation is not entirely clear even from those draft clauses as to which way Northern Ireland would go. And that is creating some uncertainty in terms of traders in Northern Ireland, and of course their access to the EU market, whether additional charges might have to be paid. So again, it's really important that policymakers can resolve that, but you have these two processes now, the negotiations and also the UK's own CBAM. So it needs a high level of integration between officials in Treasury and Cabinet Office, together with their counterparts in the Northern Ireland Executive and the European Union, in order to resolve this and give traders in NI the certainty that they need and deserve. Now, in terms of the kind of future agreement likely to be adopted, we could be looking at electricity generation, industry and industrial heat generation too, with household heating being excluded, domestic and international maritime and aviation, all coming into the scope of these agreements. And of course, the EU is also looking at, by 2030, expanding the scope of its own CBAM in terms of bringing in a much wider range of products, potentially also including synthetic polymers and plastics as well into the scope of this. So if we do have an eventual linkage agreement, will that mean that the two CBAMs are linked as well? And does that mean, therefore, that the alignment would have to apply to the design of the UK's own CBAM, bringing it into alignment with the EU's? These are all questions that this negotiation will have to tackle and resolve definitively. But there is a common goal, I think, from both the UK government and the European Commission, that a CBAM is a vital tool in preventing carbon leakage, meeting our international net zero obligations, and also importantly, providing for fair competition across global trading markets. So by 2030, we expect the EU scheme to expand into more sectors that we talked about there, potentially going as far as plastics, looking at those goods coming within the scope of emissions trade scheme phase 2. So, the sense is that particularly given the very robust decisions made by the Commission this year, that the EU is remaining firmly on track with this approach and will look to expand the sectors covered by the end of this decade. Now, in terms of what the agreement between the UK and the EU might mean, it would certainly require, in terms of the Common Understandings document issued on the 19th of May, dynamic alignment, so the UK being in lockstep with changes in EU rules on the emissions trading scheme. That would be necessary to maintain the linkage. Again, if we look at the example of our friends in Switzerland, they have a linkage agreement with the EU. They don't have a CBAM in Switzerland, but they must maintain the fiscal and carbon leakage policy nexus required to stay in alignment with the EU by that other means in terms of the ETS rules. So depending on the mechanism that's adopted between the UK and the EU, that will be an important consideration and an important precedent in terms of how the alignment scheme will work. It is likely, given that the UK is going to have its own CBAM, that there will have to be close cooperation, or depending on what's negotiated, even complete alignment between the UK CBAM and the EU CBAM. And those are issues we'll start to hear come much more to the fore when the negotiations begin in the autumn. In terms of climate ambition benchmarks, again, very clear from the Common Understanding documents that in terms of what will have to be agreed, the EU's emissions cap and reduction pathway must at least be ambitious as the EU's. It can be more ambitious, but certainly not less. And so that will put in place that level playing field that will be very important in terms of ETS linkage and what that means for carbon leakage going forward. Important changes have been made by the Omnibus 1 regulation, which is still going through its latter stages in the EU institutions. So there is a new de minimis exemption which has been put in place. So small or occasional importers of record of CBAM goods would be exempt when this rule passes. So the de minimis threshold becomes 50 tons of CO2 per importer per year. And when this is implemented, it would benefit around 90% of EU importers, about 182,000 businesses importing CBAM goods into the EU. But very important, although these simplifications apply to the importer of record, they do not remove the obligation upon the third country producer, i.e. UK producers of goods, from producing the data that must go to the importer of record. So the requirement on maintaining the information about embedded emissions and giving them to the importer of record, your customers in the European Union, is still maintained by the Omnibus regulation.
William, if I may just add very quickly, on the 50 tons is 50 tons of CO2 containing product. So it's 50 tons of product that are within the scope of CBAM. Just for clarity, because that whenever we summarize things in a diagram, it might not be clear enough.
And the simplifications which the Omnibus regulation will confer and businesses in the EU will be able to take advantage of from the autumn, simplified authorization processes, the ability again to use default values for calculating embedded emissions, albeit there's a higher rate of duty that applies if you use those default values, but certainly the choice is there again. Extended verification and reporting deadlines, and a reduced carbon price surrender requirement going down from 80% to 50% on a quarterly basis. And the new regulation also allows recognition of carbon prices that are paid in third countries in terms of the calculations that are made in terms of any liabilities. So allied to the omnibus regulation going through is also the European Commission looking at how it does indeed develop the scope of CBAM by the end of the decade. So the likely extension by the end of the decade to new sectors and downstream products, looking at the whole range of steel products and derivative products. Looking at whether to include indirect or scope 2 emissions across all sectors, how to avoid the risk of circumvention of CBAM, and perhaps to take additional policy tools to deal with that, and measures to address carbon leakage from exports. Now, it's clear globally, there are different views around CBAM. Some countries are looking to align with the EU's approach. Other countries have taken a more confrontational approach and sought to challenge CBAM at the World Trade Organization and by other means. But it is interesting that those countries which trade closely with the EU are looking at how they can minimize the creation of new trade barriers, and are looking quite closely at aligning their rules with the EU's in order to minimize the friction and make it easier for traders to send goods into the EU. And it's important that although the omnibus regulation, certainly for EU companies, particularly SMEs, does limit strongly the compliance burden, there is a strong redoubled commitment to proceeding on time and on scope with CBAM as it is. And despite the aim of the whole process being to lighten the burden on SMEs and others, very, very firm commitment to CBAM from the European Union. And that is an important thing to recall as we go through the rest of this year and into the second half of the decade. In terms of the implementation timeline, so the proposal for CBAM amendments was published at the end of February. A negotiating mandate was adopted by the European Parliament, and the Council followed that towards the end of May. Those negotiations between the Parliament and the Council started, and just in the last days they've been successful, and there is an agreed text which is now before the Parliament, and we expect that that is likely to be completing its final stages and become law in September. And of course, alongside this primary EU legislation, the Omnibus 1 reg, you've also got to think about the delegated legislation, the delegated acts, which also have to be read alongside this. And this could fast track some of the provisions of the Omnibus reg, as long as the Parliament and the Council of the European Union are in agreement on that. So, as we said earlier, for small businesses, real possibilities of exemption, but nevertheless registering still as occasional importers. For larger importers, a reduced administrative burden through simplified compliance and reporting mechanisms. For third country exporters, as we say, not a huge difference. There may be a small benefit that UK and other third country exporters experience from simplifications, but the requirement to report commercially to the client, to the importer of record in the European Union, remains in terms of the sending of those goods. And the thing that everyone has to watch, whether in the EU or outside the EU, is for that potential expansion in the second half of this decade of the scope of CBAM, the range of goods that come into scope, and new obligations that could come on stream, deriving from that review that is still taking place in the latter half of this year. And so if we conclude in terms of a summary and a timeline, as we said earlier, the transitional phase, which began in 2023, concludes on the 31st of December this year. That involved the obligation to report, but without the obligation to purchase CBAM certificates, no fiscal element to CBAM until the end of this year. The Omnibus proposal, initially launched in February, likely to be passed in September, introduces the new de minimis threshold and significantly unburdens the compliance burden for many companies. Really significant simplification agenda. As we move into September and the final stages of the legislative process in the European institutions, the likely adoption of the legislation and its implementation in the autumn, that review continuing in the second half of the year into the forthcoming expansion of scope of product and inclusion of further emissions within the future expansion of CBAM will be continuing in Brussels for the rest of this year. And as Emmanuel said, the definitive phase of CBAM implementation from the 1st of January next year, and absolutely redoubled commitment to that timeline being implemented in full. And that is where the additional obligation to purchase CBAM certificates, if there is that difference in the carbon price between the market that the goods have come from and been manufactured in and the EU market, that set of obligations begins on the 1st of January next year. So significant time of flux, but the very, very clear proposal from the EU that The overall scheme, it remains on track, on target, and firms must work and get the best guidance they can in order to comply with these new realities.
Amazing. Thank you so much, William, for a great summary at the end there. Clearly, the amount of information coming out of the resources is not for the faint-hearted. I think Emmanuel's going to talk about how we can help.
Thank you very much, William. It's really, really interesting. I think there is still, despite all the clarification that is coming, there is still so much confusion as to what people have to do, especially in the UK as exporters, because this, the way I see it, is like this set of regulations affects us, but we have to understand what our responsibilities are. And I want to reiterate, given some of the questions I was answering, that we have a commercial responsibility of providing this information, to our EU importers. As non-EU businesses, we do not report to Europe. And this is really important. There is no official report that a UK company has to submit to Europe. There is no registration that a UK company has to do. There is one thing that I will mention at the end about the registry, which might help you, but you don't have to do any formal reporting to Europe as a third country installation. Now, if you are looking for some help, what we do as Chamber Customs, supported by our wonderful colleagues around the 51 accredited chambers around the country, we offer help. And we have a formula, a package where we come and understand what you do. So we come and meet you, whether it's virtually or it's in person. We help you understand what you're dealing with. We understand what products are in scope. We work with your team. We share and we demystify CBAM. We help you work out the best strategy to prepare that reporting methodology, to understand your collection strategy, your emission apportioning, and to understand where you sit. Now, I was looking at some questions and some people are saying, but we're not a producer, we are a distributor. What do we do? Well, if you're a distributor, you still will need to provide information to your clients in Europe. And although you don't add any energy, so you don't add any emissions, you need to provide that information. How do you do it? You could have a very transparent supply chain and you could connect your upstream supplier with your client, but most people we work with don't want to do that. And so they still need to find a strategy to collect the information and actually then distribute that information. So they still have to create a monitoring and reporting approach. So what we do as a consulting solution is in 3 steps. In 3 steps, we come and meet you, we work with your teams, and when we help you create a monitoring and reporting approach, which includes the calculation that you can share with your suppliers. That's something that we can do to help. We have a human plus technology solution. So you would work with our consultants, but we use some clever software that allows us to do mapping of your precursors, your production processes, your energy sources, and then come out with a set of readings, a set of calculations which are backed by technology. The output of this provides your clients with information in their preferred format, in the format that the EU will understand. If the European importer uses the same software, they can just pull this information straight into their declaration. They don't have to. They can just have the output on a XML, CSV, PDF, Word document, you name it, we can do it. So that's something that provides really a nice reading. This is just like to show you that you can have quite a complex network, quite a complex map. So on this map, you have energy production processes, precursors, intermediate products and output products. So just to show you how the carbon emissions flow and the outer portion. You don't need to read it. That's not the point. The point is that the network can be quite complex, and we can help you do this in an easy way. We can take it off your hands and give you reassurance on how those calculations are done. Or we can actually organize a knowledge transfer session where we sit down and we explain to your team how this would apply in practice. We can give as much or as little help as you need. Now, the benefits of doing this is to actually get a set of calculations which is expert backed and it's compliant. I mentioned this, William mentioned this, there will be a need for verification. The moment we end 2025 and the transitional period ends, we get into 2026 with the definitive period, verification will be mandatory. So you won't be able just to provide numbers, you have to explain how you got to those numbers. And having a proper methodology created, backed by methods which are allowed in the easy to read 300-page manual that the EU has created for third country installations, then it would really give you some peace of mind. The important thing, we have a commercial responsibility, and what we want is to keep that supply chain intact. We want to provide the information that our clients need, and we want to remove as much hassle as possible for our EU clients when they import products that come from the UK. And finally, and this is actually what CBAM is about, you might discover that there are some specific areas in your supply chain or in your production processes which aren't very green. By making those greener, you would actually reduce the overall embedded emissions. You would therefore reduce the amount of tax that is payable on those products when they are imported in the EU, and that would make you more competitive. Now, the whole point of today was to talk about the alignment with the UK CBAM legislation, the work that you're doing to prepare to satisfy your EU clients actually will help you to prepare for the UK CBAM. And there are a couple of points that were mentioned before that I'd like to kind of go back on. And William said some really, really interesting stuff in terms of the alignment between the UK and the EU. I think it took quite a few years for our Swiss friends to align their scheme to the EU. I've heard 7, I heard 10, but it was years before they got there. I'm sure that William can quote the exact number of days, months, and years. The point is that it will take some time. Meanwhile, and that's the answer to one of the questions, there is no exemption. We have to continue to provide our reports. We have to continue to provide those numbers so that our EU clients can provide the figures to the EU. The other thing is that there are other countries that are bringing CBAM schemes in. So it is quite likely that you will end up having other countries asking for CBAM figures for exports from the UK to, let's pick a country, Mexico, for example. So even if we end up with an alignment with the EU, other countries will very likely require this information. And the final point I wanted to raise is that, because we hear this in the consultancies we do, you might actually only be selling to UK companies, which is fine. And you might think that therefore this does not apply to you. However, what you don't know is whether your products will then be resold to UK clients. And if your product eventually ends up being imported in Europe, at some point up the supply chain, somebody will come back to you and will ask you, what were the emissions embedded in your product? So perhaps the scope of applicability is a bit wider than you might have thought, but I just wanted to highlight these points to you. Now, I think, Marika, we can go to Q&As. I tried to keep up with questions, but yeah, it's shall we have a look? So please use the Q&A sessions, and then we'll the Q&A panel, and then we'll see. So yeah, I mean, perhaps William, you could expand on this point. I don't think there is a chance of exemption, but I don't know what you think. The question was, with the EU and UK agreeing to work towards linking ETS and the definitive period in 2026, what will happen in the interim period? Is there any chance of UK exporters receiving some form of temporary exemption?
Ooh, it's a really, really interesting and topical question. I think the sense you have from people in Brussels is that given that, you've got Turkey looking to align, its rules with the EU's in order to, avoid CBAM fiscal obligations, other countries looking to do the same. Is the EU going to do a sort of, bespoke UK only option here? The feeling when you speak to people in Brussels is that they're not minded to do that. So it will depend really how much the UK government makes this a sort of priority in the negotiations in the autumn. And exactly, what would the UK be looking for? Keeping the obligations as they are with the reporting requirements to the importer of record in the EU, or just a suspension of the fiscal element and the purchasing of CBAM certificates from next January. So what we can say at this point is there is no settled position within the UK government about this, and no settled position being communicated to the EU. And as someone who used to be involved in these discussions once said, the EU-UK negotiations, the clock is ticking, as Michel Barnier once said. So there is absolutely no guarantee of any exemption, either from the current requirements or indeed from the new requirements from the 1st of January as these negotiations go on. Chamber Customs and BCC will inform you throughout the process about what is happening and give you the best advice and guidance. But you cannot assume that there will be a UK only bespoke arrangement found ahead of the 1st of January here. And until there is definitive news about that, you must assume indeed that there will not be. Yes, there'll be a lot of discussions between Whitehall and Brussels in the early autumn, maybe over the summer, but there is no definitive answer on this, and you must assume that the current rules are going to apply and on the timelines that we know that they're set to apply, i.e. the 1st of January.
Yeah, absolutely. I think that's really interesting. I think it's also interesting to mention that if you can provide your CBAM values, actually you stand a good chance. We've seen it is positive for you and for your clients. We are seeing a lot of our clients that actually go through this kind of work. They do their calculation, they make the CBAM values available, and they advertise that. They advertise that to their clients in Europe and said, we're ready for CBAM. If you buy from us, we'll provide you all the information you need. So that becomes like a competitive advantage, and that's quite nice. Now, there are some very specific questions that are being asked, and I'll try my best, but I don't know what we can do in 9 minutes. One thing that I would like to say is that if you are interested in following up on this, and if you want more information, Marika, perhaps if we could have the next slide with the QR code. What we do have is we have a CBAM health check questionnaire that you're very welcome to take. It's completely free of charge, no obligation. And what that does, it asks you at the end if you want one of our consultants to follow up. Again, no obligation. It's just perhaps it's a simple yes/no question, or perhaps you need a bit more assistance, but that would be a good route into that kind of service. We offer this service through the BCC network. So whichever way you go, you'll end up to the same pool of qualified consultants. If your chamber doesn't offer this directly, we can put you in touch with somebody who does within the network. So do contact us, and we'll get you in touch with the person closest to you. Now, a few questions that have been asked. How far back in the supply chain do we need to go? Well, that's very interesting. You are going to be, if you are the party exporting to Europe, you are going to be the party required to provide that information. So in theory, your role is to ask your supplier, so you're one step upstream your supply chain, what emissions have been embedded. And the idea of verification is that the information that you are provided has been verified already, so that you can trust that information and base your calculations on what you received. But in theory, we have to be able to go all the way back to production, because what we need to provide when the goods cross the border in Europe is the total, the cumulative total of the emissions embedded up until to that point. So it can be quite a challenge. And I'll tell you that the main challenge we're experiencing right now, and I'm sure that William has heard all of this being reported back to the Commission, is the availability of the information and the lack of quality in the information we are receiving. So in the UK, the majority of people who we deal with, for example, are intermediaries. So they're buying, for example, aluminium from India or from China or from Europe. They get that and then they process it in the UK. So all they're doing, they're adding indirect emissions, right? But it's difficult for them to understand how much was already there when they bought the aluminium. The requirement is that you have a complete calculation. So that's something to keep in mind. There's a question in terms of sources. Marika, we are sharing the information at the end of this, aren't we?
Yes, just to recap, at the end of the session, once we disconnect, every participant will receive a short survey, and then you can indicate if you'd like to receive materials from the webinar, and you'll get the recording and the materials.
Great. And on our slides, we have taken great care of providing the official Europa sources that we've quoted. Two reasons. One, because you can double check and you can read the full statements and the full information. It's always challenging to summarize complex legal information, often still at policy level, not converted into guidance yet. So we like you to have access to everything. And also because this is a moving matter, so you have to keep up to date. We'll do our best to bring you, the most up-to-date information. Excellent question. I really like that. Is there anything specific that we can do in terms of logistical procedures to ensure smooth CBAM compliance? Now, two things to say. I mentioned at the very beginning, and I reiterate, that our responsibility is commercial to our EU importer. I'm going to put an unless now, and the unless is the in the case you, as the UK company, are selling DDP. That means delivering duty paid, and in practical terms, it means that you act as the importer of record into Europe. If that's the situation you're in, or if you have a sister company that imports into Europe, the European importer of record is legally responsible for that CBAM declaration. So you would have to file a CBAM declaration if you're selling DDP or your agent on your behalf. That can be quite costly, quite pricey. So you need, perhaps this is a good time to look at your Incoterms. The other side, and I mentioned it at the very beginning, is classification. Do take some time, and we can help you as Chamber Customs and as the British Chamber of Commerce at large. We can help you ensure that the classification of your goods is correct. I think 1 in 5 of the clients that come to us currently who think they have to report on CBAM find out that actually they're using the wrong code and their product isn't classified correctly. So that choice of commodity code dictates many things: compliance, the duty applicable, and whether your product is within CBAM scope or not. So I would say these are the 2 key things here to look at. William, I don't know if we have time for this. We are talking about CBAM and CBAM certificates. Are we going towards the idea of the purchase of quotas? Is that a similar concept? Can we summarize that in 60 seconds, how the CBAM certificates will work?
So these work to deal with any difference between the carbon price of goods in the European Union and the carbon price, including the embedded emissions from the originating market. And if there is the difference, then the CBAM certificates make up that financial difference. So that's the way that the system would work from the 1st of January. It's interesting, the UK system is proposed to be a little bit different currently, and they would calculate a sort of quarterly CBAM rate, like a tax that would apply. So it's interesting, although there's a lot of similarities between the 2 systems, for the moment at least there are still some differences. But the EU system works on the purchase of certificates to make up the difference in the overall carbon price.
Thank you very much, William. One more in the last 30 seconds, please, Marika. There's 2 or 3 questions about what do we report when goods cross various borders? And this is not clear at the moment. There are things that are being discussed. The case is, for example, a UK company purchases steel from Germany. The steel comes into the UK, and then it gets processed and sent, and then it gets sent back to Germany. What do we report at that point? Currently, as of today, what is in force is that same rules apply, and you still have to explain what carbon is embedded. What you can do is also report what tax has already been paid. I know that in the simplifications and that are being discussed, there are ways of approaching this so that it's easier. And clearly, if we align the UK scheme with the EU scheme, movement between the UK and the EU would actually would fall outside of the scope of the reporting. That hasn't happened yet, so you'll have to watch this space, unless, William, you know anything new in the last few weeks. At the moment, we still have to report on that. Okay, I think that's pretty much it. I know that we haven't managed to answer all of your questions, but what we're going to do, we will try and get back to you on those. We have your details, but feel free to fill in that EU CBAM health check and specify if you would like a contact from one of our team to see if we can help you further. So I think that's everything from me. Thank you, William. Marika, do you want to close? Thank you very much for your help.
No problem at all. Thank you everybody for attending in such high numbers. It's been a very informative session, and please do get in touch. I've put the link to the CBAM health check in the webinar chat if you can't scan the QR code that we had earlier on. But yeah, thank you so much, Emmanuel and William.
Thank you very much, everybody. Bye-bye.
Goodbye.
Bye.